Hey guys, this is Money Value, my name is Olga, and let's begin. Even though there has been a flash flood of bad news around this company, I think it still would be great to make an Alibaba analysis. Let's start with saying that their stock price is around $229 as for now. The 52 weeks range is from $169.95 to $319.32, and the market capitalization is a little over than 612 billion. As of the end of Q3 2020, Alibaba has its earnings per share at $17.97. For its current fiscal year 2021, earnings per share are expected to jump 36% with 22% growth seen in fiscal 2022. We'll see if they can make it happen. Now that we are done with the most basic figures, let's see what's behind them. First of all, what does Alibaba do? It is China's and by some measures the world's biggest online commerce company. Alibaba is what you get if you take all the functions associated with retail and coordinate them online into a sprawling, data-driven network of sellers, marketers, service providers, logistic companies, and manufacturers. More than that, Alibaba created a service called Alipay, a system for making payments by phone using QR codes. It's now used for billions of transactions and is making cash nearly obsolete in China. And right here you can see top 5 Alibaba shareholders. By the way, Jack Ma, its co-founder, is no longer the company's largest shareholder. As you can see on the diagram, those are SoftBank Group, Joseph Tsai, its co-founder, Alibaba, which is Yahoo spin-off, BlackRock, and T. Rowe Price. I bet you have probably heard about Jack Ma. He is more famous than his colleague. Before Alibaba, he used to be an English teacher. In September 2019, Jack Ma stepped down as Alibaba's executive chairman and was succeeded by CEO Yong Zhang, also known as Daniel Zhang. While the richest person in the world is not Elon Musk anymore, he managed to keep the status for less than a week, China's wealthiest one is still Jack Ma. His position is more stable. The day before Christmas, on December 24th, Alibaba stock sold off sharply on news the Chinese government is launching an anti-monopoly probe into the e-commerce giant. But shares rallied sharply on the following Tuesday on news that progress is being made to overhaul the operations of Ant Group into a financial holding company. It's a wonderful example of how the market reacts to the news. Oh, and there was also Ant Group's IPO planned for November 5th, but it was delayed. Ant Group is like Alibaba's daughter, and its IPO delay led to Alibaba's stock price's 6% decrease. As for Alibaba's own IPO, this company went public at $68 per share September 14, 2014, and raised $25 billion, making it one of the largest IPO in history. Ever since, the stock has been a big winner. Some people even say that Alibaba is a Chinese version of Amazon. Is it really true? Let's see. Their main difference is in the core business prospects. Alibaba is a marketplace, so it doesn't own anything, just connects buyers and sellers. Amazon, on the other hand, is a reseller, so it owns the inventory and supply chain of its merchandise. And you're like, so what? Well, here's what. Alibaba operates a business with much less overhead than Amazon, which explains the wide difference in both the company's margins. Amazon profit margin, net income as percentage of sales, is lower at 4.1% as of 2019 versus 23.3% fiscal 2019 and in March for Alibaba. 2020 results aren't out yet, but feel free to check them yourself when they are. Let's compare those companies fundamental-wise. Alibaba Group Holding has a trailing 12 months PE of 26.25 compared to Amazon's PE of 91.19. Amazon stocks look attractive compared to prior years and expensive compared to Alibaba. As for the revenue growth, Amazon.com 2015 to 2019 analyzed revenue growth of 27% compared to Alibaba's rate of 46%. And here's the historical EPS growth. Amazon has 107% and Alibaba's EPS growth rate is 34%. So, what's gonna happen to Alibaba? I can't see the future, but they have quite a good business model that allows them to put up more products than Amazon for its consumers. Besides, since Alibaba primarily relies on e-commerce operations, it still has a lot of room to grow in other non-core businesses, including cloud and digital entertainment. It only means that they have great potential and new niches to explore. As for you, you can explore that like button and make me a little bit happier. If you have access to the internet, which you obviously do since you are watching this video on YouTube, You have heard that there's a lot of news about Jack Ma and Alibaba, so what's going on? It all started a month ago when the China's market regulator has fined Alibaba and Tencent-backed company for not making the proper declaration to authorities about past acquisitions. They were each fined 500,000 yuan, which equals to about $76,000 by the State Administration of Market Regulation. And maybe some people were like, well, it's not that huge of a fine, who cares? But Chinese government did. It kind of drew their attention. I don't know what you got for Christmas, but Alibaba's gift was more like Santa's bag of coal. The State Market Supervision Administration issued a one-line statement on Christmas Eve that it had filed an antitrust investigation into Alibaba Group holdings over their suspected monopolistic practices. In fact, the SAMR published draft rules looking into stop monopolistic practices by internet platforms. It is one of the most wide-sweeping proposals in China to regulate large tech companies. Trust to be told, many of those companies have grown largely unencumbered over the past few years, transforming themselves into key parts of everyday life in China. Oh, and one more thing, Jack Ma disappeared. So what do we have here? Chinese regulators have launched an investigation into China's biggest e-commerce giant, Alibaba, which was co-founded by the richest person in China who just magically disappeared and hasn't been seen in public since November. Sounds a lot like a plot for a Netflix series, doesn't it? He reportedly missed the grand finale of his own reality TV series, Africa's Businessmen Heroes, despite his role as a chief judge on the show and saying in the social media that he was looking forward to the event. Rumors are spreading fast and wide on Chinese social media platforms about where he is, as his apparent disappearance follows a controversial speech he gave at a summit on October 24th. They say he isn't in China and nor is he in Singapore. We're about to go deeper into this Chinese Agatha Christie situation, but before we do it, you are welcome to help this channel grow, as I'm waiting for your thumbs up. Already done it? Let's continue then. So, what could possibly make Ma disappear? We can't know for sure, but the reason might be in his open criticism of China's banking system and banking officials. He even said they had a pawn shop mentality. He also said that China's financial sector basically doesn't have a system. Days later, in early November, 4 Chinese regulators summoned Mr. Ma for questioning. Then Ant's IPO was delayed, but we've already covered that part. And like you could have guessed, that was followed by Ma joining the likes of Chinese-Canadian businessman Xiao Jianxua, who mysteriously disappeared in 2017. Some people saw that he was seen as too big to vanish, but single-party systems characteristically don't like monopolistic behavior. Actually, he would be far from the first high-profile person to go missing in China. Fan Bingbing, one of China's highest-paid actors, was whisked away in June 2018. Okay, that's a fun fact, but it's not the point here. Here's what CNBC has to say about it. According to them, he isn't missing, he's just laying low. But you have to decide yourself if you are willing to trust a person familiar with the matter. Monash University's Dr. Shi said the situation facing Jack Ma, Ant Group and Alibaba was inevitable. The water is much deeper. The Ant Group poses a big challenge to the entire Chinese banking industry, he said. If you are a big fan of conspiracy theories, here are some facts for you. The first is that the Alibaba founder read his critique from sheets of paper. The second, based on the protracted share price modeling that followed, is that the 20-minute speech cost the company roughly $12.8 billion of market value for every 60 seconds of oratory. So what do you think? Was his recent invisibility forced by authorities or self-imposed? Meanwhile, the Alibaba share price remains justifiably punctured by many questions the past 2 months have raised. But Ma being talkative is not the only reason why he is off the radar right now. We've covered lots of news today, and you must have noticed that everything went wrong after Ant's IPO. No IPO actually. Apparently, there is a good chance Ma has been stepping on someone else's toes. Now, the most logical question would be, should I buy Alibaba shares now? Well, that kind of events this company is going through are great for TV shows, but not for economics. Maybe you better wait and see what happens next. Oh, and one more thing. Some top investors are selling their stock now, so it's saying something. But buying or not is always up to you. Anyway, that's where my story ends. I guess it's to be continued by the news agencies. Leave your opinion on Alibaba stock and Ma disappearance in the comments, share this video with your friends and discuss the situation. And don't forget to smash the like button and subscribe to the channel. Thanks, see you!